Good morning, everyone, and welcome to FinPro's virtual mini conference for 2020. We're a long way away from Cape Shank, except for those who are down in Bass Coast, so welcome to those. Firstly, I'd like to salute everyone that's in the Melbourne Ring of Steel. Keep it up, you're doing a great job, and we feel for you out in the regional areas, and we can't wait to catch up in person again. So today we're going to concentrate on long-term financial plans. With the new Act, the new Local Government Act, and the requirement for a 10-year financial plan and integrated planning, we think it's more important now than ever to look at what sort of solutions that we can introduce into our organisations to help us do the whole thing easier. So we'll just jump straight into it. So I'd like to introduce from CT Management, Sonia Jovches, and she's going to talk about her philosophy on financial sustainability through service planning, capital works planning and asset management planning, and how these elements combine to build the basis of a robust long-term financial plan. So welcome, Sonia.
Thank you. Thanks, John. So as John said, my name is Sonia Jovches. I'm the Financial Services Manager for CT Management Group. And so I've been with CT Management Group for 3.5 years now. So I oversee the development, installation, training and support of our financial products, which I'll provide a brief overview to you today. I just want to start off by thanking FinPro for giving us this opportunity to present, and everyone for making their time to attend today because we've got a good turnout. So, okay. So just a little bit about us, for those we might not be as well known as some of the other presenters today. So at CT Management Group, we basically provide consulting and professional services to the local government sector, and we basically primarily service the Eastern Seaboard from Tas up to Queensland. We've got offices in Queensland, New South Wales and Tasmania, and our head office is in Geelong, Victoria. Our services operate over the areas of financial management, which is my area. We've also got asset management, which we service planning, governance, contract and project management, and we can also put professional placements in place if required in your councils. As you'll see there, our board of directors is comprised of Jeff Kennett, Michael Courtney, who's located in Geelong, who's our managing director, and Owen Harvey, who's our Executive Director in Queensland. So basically the slide I've got up here is, it's basically our interrelationship between our financial sustainability products. So you see in the top left corner, we've got service planning, the top right is asset management, bottom right, capital works, and we've got all these feeding into the long-term financial plan. So basically, it's no secret that there's a lot of sections under the new Local Government Act that have been imposed in regards to financial management. So there's the 10-year long-term plan, the 4-year budget, which will have to be adopted by October next year and take effect from July, 4-year revenue and rating plan. And then the further year on 10-year asset plans, and then there's going to have to be more community engagement. So basically, if we have a look at the service planning, this is where basically there's no secret either that rate capping and effects of COVID is going to restrict your revenue raising capacity. So going forward, you're not going to be able to provide all the services to everyone at the level that they want. You're going to have to make choices between the services, which you stay in, which you change levels. So service planning will help you understand your services, define them, define the range, the level of service council's providing. We go into the costs of each service, highest and lowest priorities, and we try and get service managers to articulate the level of service they're providing to the community as at today. In that space, we extract your budget at natural account level. We have the service managers do a forward 10-year projection, and we base that on their experience or their knowledge of the demand for their service going forward and the current level of service. So when we get down to natural account level, we do it up in the service planning area and we use our service cost evaluation model to do that. And so we don't do it at our long-term financial plan level. So through the services are then wrapped up to income and expenditure level, and we'll feed those into the long-term plan. So you can see that arrow going through there. So then on the top right, we've got the asset management. So this is all about your condition assessments. As I said, 10-year asset plans that are going to have to come in a couple of years' time. We basically will have renewal demand feeding in from those asset plans into the long-term plan, and we can have it can show the gap calculating in your long-term plan figures as well. With asset management, we're talking about technical levels of service there. So once you've worked out the services you're in with your service planning and you've got your community levels of service and the assets that you're providing that underpin those services, you then want to be making sure the technical levels of service in your asset management plans are matching up there, and you're basically renewing assets that you are using to provide services, not your classic cases buildings where you might be renewing all these buildings, but might not be using them. So money can be, put elsewhere to where you are using those assets to provide services. So down in the bottom right, we've got the capital works evaluator. So the long-term plan and the capital works evaluator will give an overview today. So that's where you basically enter your projects. You can give them a score of 1 to 5. You can prioritise those. You can calculate the whole of life costs, click a button, feed that information into the long-term plan, see what new and upgrade projects you're actually going to be able to afford. So basically, for us, the LTFP is our goalpost. That's basically telling you, once all those things are fed in, what can you afford to do? And then you're going back and forward between those to make it work. So just on our long-term plan and overview there. So our long-term plan measures financial performance and sustainability, informs council policy. So it's a high-level interactive product. We've got dashboard analysis, we test scenarios and create presentations to management council. Currently, we've got over 30 councils across Victoria, Tasmania, New South Wales, and our predominant base is Victoria. We have an LTFP user group meeting annually, which unfortunately will be virtual this year and happening soon. But that's quite good. Everyone comes together, networks, and basically puts forward suggestions for our development for the years to come. So we keep the model updated and current. It's written in Excel, and people tend to, look for web-based or the newest thing. But we just figure at the moment our clients are happy in Excel. It makes the product affordable, portable, and relative. Most people can use Excel, especially in the financial management space. So the model's made up of 40 worksheets. So the first sections are in inputs, calculations, and outputs, and we'll have a look at a few of those on the screen in a moment. And the last 20 in the long-term plan does enable entry of the capital works program. So you can have it in the LTFP, or you can have the capital works module, which will prioritise and bring in whole of life costs. So basically, our long-term plan will produce the all the necessary elements as required by the Local Government Act. So features, we basically have the financial statements of always, and the statement of capital works, so operating statement, balance sheet, cash flow, always up to 20 years we've had in our model. We've got dashboard analysis that's got the VARGO indicators with your red, orange and green lights, so you can look at those pretty easily, and the LGPRF indicators, so that all goes out to 20 years as well. We've got about 34 financial ratio charts in there, and I've just done a huge upgrade to the local government model budget outputs, so they work a bit better. And basically we've got the ability to apply different assumptions for growth and indexation. We've got where we can put in details with by asset class, so you can get asset class revaluation increments on those. It'll track the contributed assets, acquisitions, disposals, depreciation, basically to support your 10-year asset management plan. So we can calculate depreciation in there on a straight line, or you can enter manual as well. They can build and maintain your 20-year capital works program in there and model different funding alternatives, basically, like I said, by the worksheets in the back of the LTFP or the capital works module. So just a few things there: ability to model rates, track reserves, forecast your borrowings. It's got provision for landfill rehab, assets held for resale, investment properties, intangible assets and leases. So just listing the things it does there. So we'll just go through the outputs here. So this is basically the budget O sheet that has basically will do your 4-year budget and 10-year plan basically in the model budget format at the moment. So you'll have your income statement, balance sheet, 10 years of statement of changes in equity, cash flows, capital works, and the statement of human resources. So they all go out 20 years, but we can basically get them in a 10-year format and a 4-year format. These are just some of the examples of the model budget tables that have been updated. So they're all in there in the model budget O sheet. We've also got the capital works report will come out in the requirements for the current model budget sheet. And we've got 4 years, that'll go out for 4 years, and it has the new works and the carry forward works there. So that's in your required formats in there. That's our ratios output. So basically the Vargo ratio indicator dashboard up the top, as I said, and the LGPRF indicators underneath. And underneath those, we have a lot of CT ratios as well, because we collect a lot. And then underneath that is the formulas for all those ratios. So you can always look to the source and the calculation if you've forgotten it. The charts sheet, there's 34 indicators in there. These are the 6 main ones I use when I do long-term plans and financial sustainability projects. And you can basically chart those out 20 years if you want. You can alter your start date, your end date. I've just done a 10-year. So we have checks in here as well. So I know a lot of people probably say it is a spreadsheet, whatever, we use spreadsheets already, why would we change? We do have a great checking mechanism in there. So it ensures there's no imbalances in the financial statements. And then within this sheet, you can basically track this back through to the source of the error. On that as well, I say if you're looking for more than 5 minutes, call me, because I've seen most of the errors that come through in the last 3.5 years, and I can pretty much find it in a couple of minutes. So these are the input pages. So we'll set you up with 3 years of history, your current budget. Basically, that's giving you indication of where you come from, where you are currently, and where you're forecasting, so where you're headed. So that's why we do that. So we'll set you up with that, with the product. So forecast A sheet is where you enter most of your assumptions. So this is, you'll start with revenue assumptions, your profit and loss. So you can enter an actual figure, you can index that figure, or if there is no figure entered for a particular revenue or expense item, it will take the growth percentage underneath, and you can apply indexation to that. Balance sheet assumptions will be an escalation on a previous period's value. Cash flow, we base that on average receivable and payable days. And the cash flow can be generated exclusive or inclusive of GST. Transfers to and from reserves can be entered and tracked. The model, as I said, can account for landfill rehab based on the user inputs. Assets, we've covered with it. You can calculate depreciation or evaluation. And debt and leases can be calculated and forecast forward as well. So yellow cells are basically input, user input. So anywhere there's a yellow cell, user input, and you can have linkages in from other sheets into those yellow cells as well. So this is the capital works sheet, where you can enter capital works year by year in the long-term plan. So there's basically 20 years of those sheets, and you go year by year and put your projects in. So you can do it at asset class, or you can do it at individual project level under each asset class. So there's 40 lines available there for each asset class. So the other option is the capital works evaluator module. So this is where the interface is with the long-term plan. So basically where you see that update inputs circle there, you press that button, and in about 30 seconds, you'll have all your projects that you want to bring in from the Capital Works Evaluator. So you can bring those in and out of that product as many times as you like. So with that product, you might choose a certain amount of projects, and then you might put it into the long-term plan, click and see that you're not going to be able to afford all those projects. So you can go back to your Capital Works Evaluator, put no's against other projects, or just bring in your priorities that are higher priorities only, and then bring those in and see where you are financially. So in the LTFP, you can bring in the Capital Works module projects. You can bring in the worksheets in the back of the LTFP, or you can bring a combination of both. So the long-term plan has got the capacity to be able to do that. So you might want to put your renewal in the long-term plan, because you don't want to be playing with that too much. And then your new and upgrades, where you're trying to work out which ones you're going to do, you might put those in the Capital Works module, and then be playing with those ones, I suppose, as to what you can and can't afford. So just a quick overview of the Capital Works Evaluator. So basically, like I said, it'll evaluate competing capital works. So it's assisting council in managing prioritised its capital works program. It's also written in Excel, so basic knowledge is only required. It caters for entry of 600 capital works projects. So, and there's multi-criteria prioritisation of projects across asset classes. So we've basically got 4 criteria, and you answer questions on each project around those criteria, and the project will get a score of 1 to 5. So 1 being least important, up to 5 being most important. So the Capital Works program has the ability to enter a 40-year Capital Works program, has the ability to fully calculate and escalate whole of life costs. And you basically running those multiple project priority scenarios is what I just said. You can go back and forth with bringing in whichever projects you want to, and see at the click of a button what effect that'll have on your long-term plan. And then you can override projects as well. If some come up saying, no, we're not going to do it, if it's priority 3 and up, it might have been a 2, you can override that to include it. So these are some of the reports that come out. Basically, it's capital expenditure by funding source per project, by financial year per project. So basically, because you've got all that project data in it, we just slice and dice the costs and the funding sources. And then it has a report which shows the 20-year capital works program that's going to come into your long-term plan. So this is just showing you the input sheets into the Capital Works Evaluator. Again, the Excel, and again, the yellow cells are user entry. So you'll basically go through an empty project with its costs and how it's going to be funded. This is the priority scoring criteria. So there's financial, council plan objectives, risk and criticality, and community benefit. And we'll set those council plan objectives and community benefit up for your council. So so then there's, like I said, score of 1 to 5. So there's no requirement to utilise the scoring function either. If you don't want to, you can still have your projects and bring them all in if it's a more effective way of utilising capital works. So this is the project list A sheet. So we actually, because it is Excel, if you do have a list of projects you do want to get in a bulk entry, we can get it in this format and get them in. And this sheet also here is where the priorities are chosen. And you see up the top, you choose your priority score between 1 and 5, and click the update button, and it'll tally all the projects that are due to come in. So then click of a button in the long-term plan and they're in. So these are just some of the outputs there. Just some of the graphs there. So I've probably spoken quickly because I was hoping we'd have time for some questions, but you'll get a copy of this today with my details on there. So probably that gives you, it's a short amount of time to give you an overview of what's in there, but hopefully is enough of an overview. But I would recommend, if you were interested in either of the products, to organise a one-on-one remote session. We do an online session. We can go into the detail of the inputs and the flow of everything through, because it takes about an hour for the long-term plan to go through and have some questions asked, but and about half an hour for the capital works evaluator as well. So yes, so that's the end of my presentation. So I'll probably throw it back to John and just see if anyone wants to ask any questions.
Thank you, Sonia. And you know, as accountants, we all love Excel, so
Yeah.
that's a great thing. So if anyone's got any questions, please feel free to pop them in the chat. There's none in there at the moment. I'm just wondering, Sonia, the number of services, this is all linked to service planning. So I get asked all the time, how many services does council provide? And my answer is usually over 100. So I'm just wondering if you have a feel about that.
Yeah, well, yes, it obviously depends on the council all the time. It depends, on the size of the council. But 100, I would say, is a lot for Surf Coast. I'd be probably, it's probably a bit granular. So I'd be probably getting down to, maybe 60 perhaps. Yeah.
Fair enough.
But that's something you work through as well. It's a process you work through. So you might start at that, and then you'll see as you go through the process, the penny drops, and then you go, and you'll see as you start to gather information on services, if you can't gather it or you're struggling to find it, it may be an element of a service. So, but I just did want to make one point on that there. The products you don't have to do service planning to use our LTFP. You don't have to buy all of the products or use all of the products. They can all be used individually, or you can use them together. So just want to make that point as well.
Beautiful, thank you. We've got a couple of questions coming through. Will the model be able to be updated if there are new requirements coming out of November's LG Act changes?
In November's, we will just gauge it. So we put it to our users normally, and we look at what the changes are, and then they'll basically say, well, yes, we think it's feasible or no. So we can pretty much, if we basically base it on the users' feedback, and then we can do it if we need to. So we'll basically go, yes, we'll do a recall, we'll do a upgrade, get your LTFPs back in, we'll churn them back out, we'll spit them back out to you, and we can usually do that pretty quickly.
Okay, no worries. There's a few questions coming through now. How does it link to the council's financial system?
This is for forecasting, so we're not doing, so not financial. So is that into like basically a TechnologyOne or an enterprise system like that?
I think so.
Yeah, so basically if you're wanting to get your stuff out of there, basically anything that can jump into Excel, you can put into here. So I would say that would be the short of it. But if someone wanted more specific as to what financial system they were using, we would probably go speak to them directly and see exactly what they were looking for. Yeah.
Okay, because the next question's got a couple around whether we manually input data in or we can import from finance systems.
Yeah, so like I said, if it can go into Excel, if you can basically get anything into Excel, it's easy to do an intermediary sheet into Excel and then into any of those yellow cells. So where user can enter data, you can have links going in from an intermediary Excel spreadsheet would be my short answer. Yeah.
Okay. Is there any linkage to the council plan?
That's a good question. Not directly that I can see. There's more linkages to your model budget. Yeah, it's a good question.
Okay.
Good question.
Someone's asked about cost, but I might encourage them to contact you directly. Yeah. If we're looking for a valuation of asset life costs from a particular project, is it something your asset management modelling could provide?
Yeah, so we'd probably, so we would get, that's not in my area, but we do have, I'll make a point of saying we have consultants in the asset management space, yes, so definitely get in contact with me and we can work that through for sure. Yeah.
Okay, great. One of the things that that sort of my eyes popped a bit was the balance sheet forecasting looked really good, and the VAGO and LGPRF indicators where you're populating the last 3 years and you've got the next 4 years, so it would make it very easy to populate those reports at the end of the year. So
So we've got all those go out 20. We've always had them there for 20, so it is there. Yeah, so it wasn't. Yeah.
Excellent. Well, thank you very much, Fiona. Those with further questions, I'd encourage you to contact Fiona directly. Her email's on the screen there, and there'll be copies of this presentation and this recording on the FinPro website probably next week. So thank you very much.
Thank you, John.
Okay. All right, thank you. So next, our next presenter is from TechnologyOne, and this is David Young. I'll introduce David. David.
Hi, everybody.
I'll let you run away with it, David. It's all yours.
Fantastic, thank you. All right, good morning, everybody. My name's David Young. I'm a senior pre-sales consultant here at TechnologyOne. So I'm going to run you through our long-term financial planning solution. So if we look at long-term financial planning inside of TechnologyOne, we take advantage of the financial chart of accounts inside of TechnologyOne as well as our enterprise budgeting solution. So for those who haven't seen our enterprise budgeting solution, it is a module which is driven via the chart of accounts, allowing you to enter your budgets at any level of the chart of accounts. We devolve out packs to the individual users to be able to enter the data that they require. We can have unlimited out years to be able to create a budget for, seamless rollover into forecasts as well. So if we start looking at how we'd use this tool set for long-term financial plans, we understand that councils have a number of budget levers that can be adjusted to forecast their long-term financial plan. These can be things such as rates and waste charges, user fees and charges, debt management, investment portfolios, amongst a whole heap of other things. But how does this affect the long-term financial plan? So if we start looking at the 10-year plan, that plan can be built up from 10 years and broken down into the delivery program and then into the operational one-year plan, a one-year budget, or we can do it the other way around. So for those who are currently using enterprise budgeting, you may be doing a 1-4-year budget model at the moment. The first operational plan, which is very detailed at the account level, followed by your delivery program, and also your 10-year long-term financial plan as well. The key thing to note along here is we can link it to your strategic plan, your strategic directions along the way at every single level of this structure by easily tagging the either cost center, the entity, the business director, or even down to a project level of what action, activity, deliverable it relates to. Now, in an ideal world, this is what I see as the long-term financial plan looking like. So we start off with the first iteration of the long-term financial plan. We then look at putting assumptions, growth indices to be able to start calculating the out years. The next stage is bringing in those budget bids and initiatives. So this can be done from an external system or utilising the project lifecycle management inside of the TechnologyOne One Council environment. Once all that information is brought in, we can start doing budget iterations. So we can do multiple different versions of the budget before we come up with the long-term financial plan. This could be simple things such as, okay, so what happens if we change the funding towards projects? We then go back into that forces a message to go back to someone in project lifecycle management. And from there, they will go in and update which projects are going to be funded for the next 10 years. We can start doing some fees and charges and rate modelling inside of the budgeting system. So if you do have fees and charges that you want to be capturing, they could be living in the One Council environment in an external system. We can import all that information utilising the automation and import tool sets to be able to bring that data inside of a worksheet. Again, the same with capital and OPEX projects as well. We have tool sets for our strategic asset management and asset lifecycle management, where we can do all that scenario modelling and bring it in. Doesn't mean you can't do it inside of a long-term financial plan or do it in an external system, but that's a key component of the long-term financial plan, bringing that in. And as we go along the bottom line, you can see that from all this information we're bringing into the system, we can bring out an operational plan for the next year. We can look at bringing out a delivery program, and we can also get the long-term financial reports out of the system automatically. Now, let's jump into this off and I'll actually show you an example of what that looks like. For those who have not seen enterprise budgeting, I'm going to jump in and show you a budget worksheet. So inside of here, there's going to be a whole heap of worksheets which help me create my long-term financial plan. I'm bringing information in from multiple different sections, have rules running in the background to be able to generate my long-term financial plan for me. So if I start up by looking at my salaries and wages, this information here is being pulled from TechnologyOne's organizational structure, but doesn't mean you can't bring data in from an external HR system and importing the latest organizational structure into the plan. From here, the budget for this particular set of salaries is created. So if I scroll across, we can see that I've got a whole heap of information, including commentaries. I've got detailed breakdown of the first 12 months. I then go into a more summary level for the out years. In this particular example, I've got 12 years of budget. This can be done as 10 years, 15, 20, depending on your requirements. What's driven in the background is our indexes. So the indices are deciding what the increase each year is. So as a general rule, we've got calculations working in the background to say anything entered in salaries and wages is going to, by default, take the index for salaries and wages. This can be set at CPI or any other percentage of increase over the years. If there is a change to a particular position that you know there's different changes, we can actually come across to the end and actually change the rate. So we don't have to pick up the salary and wages one. We can pick up one of the ones that we've created in the background. It could be just a general CPI increase, a rates increase, depending on what we want to be able to do. If I scroll right down to the bottom quickly, I have the capability of updating my indexes in here. So these are my indices in this particular screen here, where I can start creating new ones or I can update. So by just simply changing these values, this is going to change the increase for each out year. Other things that we do in here is, I mentioned before, we've got our project lifecycle and asset lifecycle management tool sets. So this is where we can bring in all those projects, and I brought it in at a very high level. But because we've got these external tools, which are the source of truth, the long-term financial plan gives me the ability to automatically just suck in all that data into these worksheets. And these worksheets calculate the plan for me. Right. As you see, again, I've got a breakdown month by month, and then I've got my out years as well, which are annual budget, which are annual figures. I can come in here and change my funding amount. So if I say my funding is going to be changing by $1 million for the year, I can make those changes inside of the long-term financial plan, submit it off to my project managers or my asset managers. They're going to be notified that they have to tweak inside of asset lifecycle management or project lifecycle management the dollar figures and which projects are going to be funded. So that can all be done from this central location, and it's all workflowed. Other things we can do is bring in depreciation. So if you do have assets living in an asset book, we can bring in all that, automatically calculate the next 10 years worth of depreciation with rules in the background. The other key thing is our fees and charges as well. It's a great little tool set which allows us to bring in all those fees and charges information. We can do a little bit of modeling in here as well, so I can change the figures, see what the outputs are, see the breakdown year by year on the right-hand side. I can add new ones in here if that's what I want to be able to do. But again, like everything else, we can bring it in from the One Council environment, or we can automatically suck it in from external systems. So as long as we have access to the external systems, we can bring them in. So if you've currently got a spreadsheet you're working on, your fees and charges, you could automatically just bring that in either via a business, via an automation process, or manually import the spreadsheet in by this direction in here as well. So that gives us that capability, and we can really start getting some reports out utilizing this information. So it's not just about getting this information in for 1 year, it's about being able to calculate the 10 years and also automating all those reports. So the next thing I want to do, as you see, there's a lot of options, a lot of information to be able to capture in here. I'm going to try and keep this as quickly as possible, so I won't go through all the information, but if you do need more detail on what data we capture, how we calculate everything in the background, feel free to drop me a line and we can get a more detailed conversation going. But if I scroll right up to the top, I've got a few tabs up here. The first of the tabs, by phasing, I just wanted to show you. So this is where we capture all the information. In fact, we've calculated all the information. So you've captured all the information in worksheets. We have rules in the background which are going to calculate our long-term financial plan. So part of the long-term financial plan, we can do an annual budget or that delivery program budget as well and associate it all to our strategic plans. So in here, if I expand this, in looking at my annual budget, I'll pick one particular line in particular. Let's go employee expenses. All right. I can see I've got a locked row here, which is bringing in some salary information for me. I've got some payroll details, some superannuation, annual leave, all automatically being calculated in here. I can also, for everything else, for those those expenses which are calculated, which are not calculated from worksheets, I can type in my information, choose how it's going to be spread for the first 12 months. And that's going to automatically spread it for the next 12 months. And then those indexes are going to come in and spread it for the next 10 years. The next one down is what it looks like over the next 10 years. So as you saw, it was a breakdown month by month. Now we're looking at more of that high level. How is it broken down year by year? Let's open up the activities as well. And as you see, I have this capability. And for the people who are authorized, they have the ability to go through and override or maybe make some adjustments to those figures as well. Now, this is a key thing to note. As you see, we've got these indexes which are driving the out years. For those who looked at the long-term financial planning solution we had a few years ago inside TechnologyOne, you notice that we're no longer doing any mapping. So we used to take a very technical approach to it, but we've removed that mapping, allowing us to get the long-term financial plan and based upon rules in the background, but also getting a cash flow and balance sheet budget as well from this particular worksheet. So if I scroll down, the next thing I want to show you is my reports. So I've got 3 different reports that are attached here, giving me my projected balance sheet, cash flow, and long-term plan. So if I show you what these reports look like, I can quickly run. Let's run my projected balance sheet, for instance. And based upon all that information, calculations being driven in the background there, it's going to give me a 10-year balance sheet report. So there we go. There's a 10-year balance sheet report that it's running. Also have the same capability in projected cash flows. Now, while that's running, I'll probably jump back to a little bit more detail on how we start the budget. So when it comes to balance sheet and cash flow budgeting, because it's an integrated solution, One Council, we're actually for the opening balances, pulling back all the actuals that live inside of your finance system. So we're pulling that financial actuals for period 0 and then utilizing the budget periods for the remaining periods and the remaining out years to calculate your cash flow and balance sheet, which allows us to start doing forecasting as well. So if you want to do quarterly forecasts on your delivery program, we can do that by, at the end of quarter 1, we populate period 1 to 3 with actual values. and spread the remaining budget so we can keep track and make sure for that those next 10 years and also the next year that we're on track and keeping to our plan. Now, the final report that I've got in here, let me quickly run this, will show me, I think starts off with the trial balance, but we also then have asset reports sitting below that to have a look at maintenance schedules, what our capital works is going to be, and amongst other reports all generated in here. So it's an income statement. So I've got my income statement for the next 12 months, the next 10 years. And all the data in here can be reported on yearly, as you're seeing, or even monthly. It's really up to the configuration of the system. Now that's an overview of what looks like inside of the budget model. There is one last thing that I want to be able to show you. So if I come hit my home button, let's leave this, and all that information that's been captured is able to be reported on. And the final thing I want to show you, if I jump into my reports, there we go, is my fees and charges. So this is a report that I ran earlier, but based upon all that information that you saw inside of the worksheets around the fees and charges is able to be outputted into a fees and charges schedule for the next 12 months as well. So here's just an example of fees and charges that we've got available to us. So the long-term financial planning solution, as you see, incorporates the 12 months, the 4-year, the long-term financial plan. We're able to link it all to our strategic plan, and we're also able to report on all the data that's available. That's gone very quick. Sorry, I think I spoke a little bit too quick there. If you have any questions, we've got plenty of time for questions.
David, and we'll just see if any questions pop through. I love the functionality of popping out a fees and charges schedule. That's fantastic. Would save a lot of work. I think the flow chart that you showed at the start just identified for me how much work's actually involved in putting together a long-term financial plan and how much a system could help us and save us some time. So, okay, we've got some questions coming through. What are some of the assumptions for balance sheet and cash flow budgets, and can the linkage between income statement and those be customised?
So the assumptions along those lines, so against all of our expenditure and revenue lines, we will assume that they are associated to a debtor and creditor type. And the assumptions will decide, for instance, if it's telephone expenses, I'll use that one as a nice easy one, that will pay them 14, 30 days, 45 days after receiving the invoice. So it will automatically do those calculations for us. Right? Everything you saw is completely configurable. So if it doesn't, the rules aren't exactly what you need, you can configure the rules to meet your requirements.
Beautiful. Okay. The next question, is this standard in the EB package?
It is a configuration of it. So all the functionality is available. It just needs to be configured to meet your requirements.
Okay, beautiful. Is there any other questions that people want to pop through in the... Yes, here we go. Are the reports relatively preset to match the current model budget and financials?
Again, we utilise our Excel-1 report writing tool. So as part of what I've showed you there is the cash flow and balance sheet one is out of the box. It's part of the long-term financial. It's something that we've already got pre-configured, but they can be redone. It's an easy task to be able to do, especially people who've got in-house TechnologyOne customers at the moment. You've most likely got some very skilled people with Excel-1.
Is there automation for FAGO sustainability risks? And I think that means the reporting of the indices there.
So we can report on all the indices there. Out of the box, there's nothing, but that doesn't mean we can't generate reports. The other thing, the key thing I probably should have noted, especially around the indexes, let me just jump back in the software. There. That raises actually a really good point. So every little change is, especially looking at the variables and things like that, right? is captured for audit purposes. So every change, IDs, who changed it, when they changed it, and because I haven't changed this one, there's nothing come up. That's a really bad example. Let's click on this link up here. It's going to show me every change that has been made to this pack. So if someone goes in and updates those indexes, that's going to be highlighted and able to be reported on.
Beautiful. That certainly adds value. Some more questions popping through. Are there any predefined templates available in EB for the fees and charges schedules in CI Anywhere? Is it easier to configure them?
There is going to be. We're currently trialing it out with a couple of councils. But in saying that, it is something that our solutions team is working on at the moment. And it is very easy to configure. As you see, it's a worksheet, a very simple worksheet, along with a publisher report.
Next question. Does the TechOne platform need to be over in CIA already, or config can be done in CI only? And if configured in CI, would that config port easily to CIA in the future?
All right. So I've just showed you the CI Anywhere platform because it is the latest version. Everything I showed you, it will not stop you from configuring it in CI. The really good thing about enterprise budgeting is the R&D team has gone away and actually created an automated update process. So when you're ready to roll across into CI Anywhere, in the configuration screen, there's actually a button to say convert from CI, and it will convert everything from the CI to the CI Anywhere version.
Okay, great. When there are changes in the model accounts and model budgets, do you update for your clients?
I take it, correct me if I'm wrong here, but you're referring to if we update the chart of accounts. If that's the case, because enterprise budgeting is linked directly to a financial chart, those changes of the chart of accounts will automatically flow through.
Yeah. So if there's, I might extend that question, if there's changes to accounting standards that require a different routing for leasing or things like that.
Oh, yep.
Yep.
If there are changes to the accounting standards and you need to update your budget model, there comes two approaches. So we have the capability at TechnologyOne using our AMS program for us to come in and do the configuration for you. Alternatively, generally, what we like to do when we do an implementation of enterprise budgeting is do an approach called train the trainer, which means we try and give you the skill sets to be able to maintain it yourself. So only if there is major or very complex changes that you need to call us.
Okay, thank you. And thank you very much for presenting today, David. We'll have all your information up on the website, along with the recording of this session. So thanks very much.
Thank you very much for your time, everybody.
No worries. And I'd just like to remind everyone that we have another session at 2 o'clock. So jump on and register if you haven't. And tomorrow afternoon, starting at 1:30, we've got an action-packed agenda full of all the people that you love to see every year at the conference. And afterwards, we'll be having a virtual drink session, and we'd encourage everyone to wear their footy collars or their scarves and beanies and just socialise and have a drink. It's called a happy hour, but you have to fund it yourself, unfortunately. But I'm sure we'll catch up in the future. So thank you, and I'll see you all again at 2 o'clock.